Hello, my name is Irvin Contreras. I will be talking about the second company called Fidelity Investments Incorporated. Fidelity Investments Incorporated is a privately owned company. It was incorporated in 1946 by the name of Fidelity Management and Research Company. It currently employs 15,800 employees and has a total net asset worth of $373.6 billion. Well, how do they make their money? Well, just like the other mutual funds, they charge a load. That's a fee to buy or sell shares of the mutual fund. There are many no-load funds that charge a fee to buy or sell. However, even no-load funds charge maintenance fees that are a percentage of your investment. This is a usually small percentage, but it can add up as the years go by. Units of a fund are purchased according to the investor's needs. The fund manager invests a pool of money referred to as corpus into various securities that are a collection of shares, money market ventures, and debentures. These securities and other securities, when certain holdings are not as successful, they are counterbalanced by other securities and are successfully performing well. Often professionals, money managers, are hired to help inexperienced investors make wise investment decisions and to oversee the success of the investor's investment. When the various securities perform well, the income gained from the capital appreciation is then distributed and divided between the investors according to the amount of units purchased by each. Mutual funds can supply a high return on investment money due to investing in a diversified mutual fund investment strategy. Well, where is Fidelity today? Fidelity Investments is an international provider of financial services and investment resources that help individuals and institutions meet their financial objectives. Fidelity has grown to be more than just a mutual fund company. Fidelity has adapted and evolved over the years to meet changing needs to its customers. Today, that evolution is reflected in the variety of products and services. In addition to more than 300 Fidelity mutual funds, they also offer discount brokerage services, retirement services, estate planning, wealth management, securities execution and clearance, life insurance, and much more. Their most popular innovation was the introduction of the E401k, the country's first 401k plan sold and serviced online. Fidelity is committed to bring more and more changes for the future. They ensure on an ongoing commitment to innovation to extend Fidelity's 50-plus years tradition of excellence. What hasn't changed over the years What hasn't changed over the years is their commitment to continuous improvement, state-of-the-art technology, and peerless customer service. Fidelity is responsible for many innovations that are standards in the industry today. They reinvest a substantial portion of our revenues each year back to the technology to deliver new products and services to the investors. And they are consistently recognized by industry surveys and publications for providing some of the highest levels of customer support. In 1986, Fidelity has 2,800 employees, 104 mutual funds, $50 billion in assets under management, and more than 2 million customers. 400,000 of them in the $4 billion Magellan Fund. The number of mutual funds have grown now to 462 mutual funds, and they're divided by mutual funds by investment objectives such as equity mutual funds, high-income mutual funds, fixed-income mutual funds, money market mutual funds. 5 of the largest funds by assets are cash reserves, Contra Fund, Diversified International, FIMM Money Market Portfolio, FIMM Government Portfolio. Major trends in the industry are, according to the Wall Street Journal, are there will be fewer, not more, open-end mutual funds a year from now. The mutual fund industry is still booming, but several factors will keep growth in check. The success of exchange-traded funds will limit the appeal of launching more conventionally traded mutual funds for now, which it will slow the creation of new funds. Recent market volatility will also sweep away many of the stinkers. with fund families dusting poor performers under the rug by merging them into more successful funds. That will help consolidate the number of existing vehicles. Another one that the Wall Street reported was expenses ratios will fall. Fewer funds with greater asset bases should create lower expenses ratios within the industry. But that is really just the beginning. The growing popularity of ETFs, typically passive vehicles with low management fees, will inspire the actively managed mutual funds to follow suit. The third and final one is roller coaster rides continue. Earlier this decade, investors were spoiled as the market gradually rose without much volatility. The 200, 300, 400, and 500 point pops and drops in the Dow that came to be the norm this year will continue in 2009. Particularly in the first quarter, they think some catalysts will drive that volatility, including the formal announcement of a massive infrastructure program by the Obama administration, and the demise or the second rescue of the nation's automakers, a rise in unemployment, and any news out of the financial services and housing sectors. Investors are just going to have to learn to live with the ups and downs.
Hi, my name is Kathy, and I will continue the information based on Fidelity Investment. I will go ahead and proceed talking about the SWOT analysis and job opportunities for FIU graduates. Fidelity Investment SWOT analysis examines a company's key business structure and operations, history and products, and provides summary analysis of its key revenue lines and strategy. Their strength: helping people reach their financial goal, different approaches to managing money, commitment to practicing and communicating the benefits of a well-defined long-term strategy that's developed and nurtured over time with unparalleled company-by-company research. Weaknesses: due to the financial crisis, the stock market has decreased, which we all know, and has caused consumers to purchase more secure financial services and investment resources, causing a reduce of Fidelity's customers. Opportunities: being a privately owned company, unlike many of its competitors, has given protection for short-term market and business pressures. This flexibility allows Fidelity to invest over time in the infrastructure and technology that in part allow for the growth of the company's retirement and outsourcing business. In 1972, Edward C. Johnson III, who had joined the company as an analyst in 1957, took over the helm of Fidelity. Under his leadership, Fidelity diversified its business with new industry-leading products and services and adopted technology to provide world-class customer service. Threats: a major threat to mutual funds companies are the exchange-traded funds. Now let's talk a little bit more about the employment opportunities for FIU graduates. Fidelity has great employment opportunities for graduate students. FIU graduates have worked hard to prepare themselves for a great career. No matter what their graduate degree is in, there's an opportunity for them in Fidelity. They hire in more than 10 different career areas such as corporate services, consulting, financial accounting, investment support and trading, marketing, advertising, media and communications, and technology. A job at Fidelity can open up a world of career possibilities. There they can build a career in their chosen field, develop professionally, and explore various career paths throughout the company. As they say, we want great minds. This concludes our presentation on Fidelity and Vanguard, and we hope you enjoyed our presentation. Thank you.